ingredients for a successful trade. And I want to do some chart analysis with you guys as well. For those of you that are new here, my name is Anka Metcalf, and I'm the CEO and founder of TradeOutLoud.com. I have been trading professionally for 17 years. I day trade futures and I swing trade equities and futures. Prior to becoming a professional independent trader, I come with 10 plus years in investment banking. And I'm also the founder and CEO of TradeOutLoud.com, which is the trading education company that is specialized in educating individuals how to day trade and swing trade the futures and the equities markets. I'm also the designer of an institutional proprietary trading system. The reason why I'm the designer is because I have adapted it to my own trading requirements and my own trading account size. So for the retail accounts, for the retail account size, and my method is based on price support resistance. There are actually 7 layers of price support and resistance within each chart. I look at specific trigger times throughout the trading session. There are actually 3 very important specific trigger times for the New York trading session that happen every single day, almost like clockwork. And there are some for the afternoon trading session. I also teach trigger times for the London session as well. These trigger times are proprietary to the method that I teach and I trade. They come from my 20 plus years of trading experience. I come also from stock trading background, day trading stocks. This is something that I have been doing for a very long time. And for simplicity, about 8 years ago, I have transitioned to day trading futures because less time, less work than in stocks. Also, specific price zones are also trading in correlation with chart synchronicity and divergency. So in a market like today, in a market like yesterday, there are always leaders and laggers, even amongst indices, because it is all about the stocks that are forming each individual index. So for instance, on a day like today, we started with relative strength in NASDAQ, and we had a really, NASDAQ and Russell actually were one of the strongest indices right off the bat, and they had a good run into the New York trading session, into the first, I would say first hour into the trading session before we had the Fed cut rates today. We had the market like that, but the market didn't really love the fact that there were no QEs, and probably this is something that the market would expect right now. And the market soon started to sell off. I'm going to give you some parameters today. We're going to talk a lot about trading and a lot about charts. These throughout the trading session today, we started with relative weakness into the Dow compared to NASDAQ. So one of my favorite trades today was to execute a trade long in NASDAQ and actually long in gold that was setting up. And these are based on precise synchronicity, divergency, and price action reaction. I also trade with a very strict set of trading rules. And for those of you that have watched me, and for those of you that are here and are in my trading room, you guys know that I have a lot of patience to wait for pattern formation. For me, it is very important to have discipline and also patience to wait for certain parameters to be met. If those parameters are not met, then I don't take the trade. I don't have a compulsive style of trading. I don't take a lot of trades throughout the New York trading session. In fact, I trade between 1 and 3 trades a day. I also send out parameters and for the specific trades of the day ahead of 9 o'clock. So there is plenty of reaction time between 9 o'clock and when the market opens, when things are starting to ramp up. Due to the overlap of the London session and the New York trading session. And base my trading in the first 2 hours because it's the most volatile. It's something that I have done for almost 18 years now from day trading. And I have been day trading only this period of time. I've been trading most of the day, but specifically specializing in this first 2 hours of the day. I like rapid moves. I like in day trading, it is for me an income producing style of trading. And I trade based on price velocity. I trade on volume, high volume, and even when I trade stocks or I swing trade stocks, I select stocks that have an above average volumes. And I don't trade anything that is thin. That opens up the door towards spreads and other types of nonsense that I don't like to see on the charts. I also have a 10-point scoring system that enables myself, and I teach it to my traders, to identify trades with ease. So the price needs to meet a certain criteria, the chart needs to meet certain criteria before we actually pull the trigger. So this is sort of like a checklist, and if you only have, let's say, half of the list that only meets half of the criteria, then we are not going to take the trade. If it's 75% or more, then we take the trade. Okay. For those of you that are new to Trade Out Loud, if you want to find out more about what we teach and what we offer, you could go to our website and visit our products and also our services. If you are on social media, you can visit us with the handle Trade Out Loud. So these 5 ingredients that we're going to talk about today will impact your trading and increase your profits. First off, for those of you that are not futures traders, let's talk a little bit about why my love for futures. First of all, I mentioned that I come from stock trading background, and I was a very, very active stock trader, day trader. And there was one thing that struck me at one point, and that was about 9 years ago. So what happened was that every single time I did my homework for, finding stocks in the morning before the market opens, compiling my gap list, going through analysis, et cetera, there was one common denominator that I had, and that was the fact that I started the day looking at the market indices, right? Because my selection criteria was based on relative strength and relative weakness compared to the market. So I would look at the market, I would look at the Qs, I would look at the SPYs, I would look at the diamonds, and I would form my bias. So if let's say the Qs, or if the S&P SPYs, or if the Dow was one stronger than the other, then I would automatically go to NASDAQ, to a NASDAQ list. And I would scan through the NASDAQ list, and I would scan through the gaps in the NASDAQ list to see who is the laggard, what sector is leading on that specific morning. And it suddenly came to me, it's like, okay, so I'm doing all this work, that basically takes, some time, when you look at the market, when you look at the volume, and when you look at the economic releases, and when you look at earnings, et cetera. So there's a lot of work involved, but I noticed that, hey, you know what? There's one common denominator. So I'm always looking at the market, and why not just trade the market for a little bit, instead of looking through stocks, I started to trade just the market. So I was being a little bit lazy. I wouldn't call it really lazy, but I was really trying to simplify my life. And I found that, I was trading with really high success. I was trading the Qs and the SPYs with a lot of success. I was also trading Russell at that point, and I was having a lot of success. And then it struck me, it's like, wait a minute, why don't I just switch instead of trading the ETFs? Why don't I switch and actually trade futures where I could have access in overnight trading, in the overnight trading? So why do you think it is so important to have access in the overnight trading? It is imperative, especially in volatile market conditions, because you are hands-on. So what would happen if, let's say, you took a long position in the market like today, right? And what happens if the overnight trading session is not going to like the results from tonight, from just having one of those Super Tuesday, okay? And the market is going to start falling apart. So you wouldn't have any kind of control over your position. And the one thing that I love is that I'm always in control. So if you like to be in control of your trading, this can be an option for you. And futures market provides you that really great option because it is a 24-hour market. You are always hands-on. You're always going to add to a position, take a position, clear a position, take profit on a position. And this is great because about 8 years ago, you know, I was looking at gold and I had a lot of positions in gold. And then I didn't have a good handle on gold in the overnight trading session. So then I started trading gold futures, and it kind of opened this whole universe for me because it simplified my trading. So I literally ditched the stocks for day trading in order to trade futures. And I only trade the four indices. I trade the E-mini Dow, the S&P, E-mini NASDAQ, and Russell. I trade all of them because they're not all created equal. And I think you would have literally blinders if you would just dive into the Dow or if you would dive into NASDAQ. They're all into a relationship of relative strength or relative weakness or divergency. And you have to trade what is into that momentum. You could also trade earnings, if you wish, through futures. For instance, if you have earnings that are coming from big market movers like Google or Boeing or Amazon, etc., then you can trade it through the index. Remember that this is a market that goes beyond 4 o'clock when the stock market closes, and those reports are coming out after 4 o'clock, between 4 o'clock and 4:30. And you can take advantage of that move because you know that if you have good earnings in Google, then NASDAQ is potentially high odds. There are very high odds for NASDAQ to push higher. Okay. One of the things that drove me personally is the simplicity, right? So I only trade 4 charts, and it's really hard for me to miss a trade when you only focus on this 4 chart activity. So you wake up, if you wake me up at 4 o'clock in the morning, I kind of like know the average where, let's say the E-mini S&P is trading in. So I don't have to even look at a chart. So I know the structure. I have the structure embedded in my brain because you look at it every single day. The weekly structure, the monthly structure, the daily structure, the hourly structure. So one of the other things that I love about it is that you can make more money with a relatively lower account. There are no minimum account sizes of $25,000 like in the stock market, because in the stock market, if you don't have, let's say if you open an account with $25,000 and you lose a penny, then your day trading status is out the door. So in futures, you're literally trading these huge market movers like the S&P, NASDAQ, Dow, Russell, crude oil, gold, bonds, and you saw the moves that we had in bonds. You guys saw the moves that we had in gold, right? So you could take advantage of this. I took advantage of them, and you could actually take advantage of other commodities that may be on a move. For instance, I've been looking at copper. Copper is looking kind of bearish if it breaks support. So you could take advantage of these moves. And remember, you have a 24-hour handle on this market. So this is one of the big advantages because you trade these major markets. You could also trade for income or wealth. So that is day trading. So for me, this is an income producing style that I trade, and I only trade 2 hours a day, day trade 2 hours a day. Because it is very difficult to focus more than 2 hours a day, especially when you are day trading, and especially when you have 100% undivided attention. There are no phone ringings around me. There is nobody to disturb me in the room. There are no pets, no nothing around me. So I'm just 100% into the chart, into the zone, just trading. And of course, there is the wealth generation that is created by swing trading, and of course, active investing. Tick values and price ranges allow trading the market at price points that matches your account and your comfort level. And this is fantastic because especially in this market environment, you know, the tick size definitely matters. So you have the Dow where 1 point is $5. You have the S&P where 1 point is $50, and you have NASDAQ where, let's say, 1 point is $20. So you can find your comfort level as well, along with the chart, structure. The other thing that is fantastic about futures is that it allows you to trade with micros. So especially in this market environment where you have hundreds of points in risk, because this is how the market is structured right now, and volatility brings back these ginormous ranges. You can make a lot of money, but you could also lose a lot of money. You could actually blow up your account if you don't know how to trade with the proper risk. And this is the best thing that you could do, trade with E-minis, especially this. And we had traders today that have traded the market with E-minis. We have traders that have traded with full-size contracts, and I'm going to share some of their opinions with you today. And actually what they said today. You have really reliable volume. It is a very liquid market, 600 billion daily turnover, allowing instant execution. So did you guys know that about 3 years ago, JP Morgan and Chase have allocated more traders and they actually took traders from their stock day trading decks and allocated them to the futures desk. Because futures are becoming more and more popular because you can make a lot of money with smaller accounts. Leverage, obviously low margin requirements and very low commissions. I don't trade on leverage, but this is something that you could do. This is your personal decision. No scanner like in stock trading, no special indicators, no shiny indicators. You have great tax advantages, simplify reporting at the end of the year, plus the 60-40 rule. You could take on a short position with these, and guess what? No uptick rule. For those of you that are stock traders, you know what I'm talking about. There's no pump and dump. There's safe from rumors because you're basically trading the markets. You're basically trading NASDAQ. You're trading the S&P 500, etc. And it's really great for hedging, right? So we always have opportunities where if the market starts moving down, we're hedging with either the VIX or we're hedging with bonds. We're always having a position in gold. In fact, this is going to be the big year in gold. I've mentioned this from last year. Last year in my portfolio and in our performance and also in my personal performance at the end of the year, I've noticed that the biggest gains came from gold. So it was a massive year for gold, and it's continuing to be a massive year for gold. We've made a lot of money in gold. We just got in gold today, and we have achieved, I think, 4 or 5 targets in one day, swing targets all in one day. Let me tell you the biggest advantage, and this is what I like about futures trading. I'm going to give you an example here. This is a chart of the Qs, and I'm going to share with you the entry. You could see it right here, $233.10. And I took 100 shares, for example, and it was about a couple of weeks ago. And I used about $11,000, almost $12,000 in buying power to buy 100 shares. And guess what? The trade duration, so I took the same strategy that I would use for a long position. I initiated the trade with 100 shares, and you can see the result. 40 minutes later, I made $100. We have a highly algorithmic method. We are extremely precise. I determine the trades, and I teach the traders how to determine the trades before the market opens. I don't trade ahead of the market open. Rarely that I do that. I like to see that infusion of capital into the markets at 9:30, and that is what's driving the price for me higher or lower. So the trade entered at 11 o'clock. Trade duration was about 40 minutes. Buying power, like I said, close to $12,000, and in about 40 minutes, I made $100. Now, take a look at the chart. Look at the moving averages. Look at the structure. Look at the candles. Pull back and then rotate it and move higher into the target right here, right? You could see the price points right here. Okay, let me share with you. This is a NASDAQ chart. This is futures NASDAQ chart. There are absolutely no differences. The same candles, right? They're the same candles. It has the same structure, the same moving averages, the same volume, the same dome. Everything is the same. The entry is the same. The entry criteria is dot on the same. The entry in this case is 95.73, which matches the entry in NASDAQ 100%. So it's carbon copied, the same entry strategy at the same parameter as in the Qs. The trade initiation happened at 11 o'clock. I'm actually using for one contract only 8,200 in buying power effect. Now careful, this is buying power effect. And I'm trading it with one contract, right? One contract right here. So I try to make as equivalent as possible. So I try to match those $8,000 to those 11 plus $1,000, right? So I try to have a similar buying power, right? With the same buying power, using the same strategy that I use, I was able to generate $790 trading the NASDAQ in minis versus trading, here's the other slide, versus trading the Qs. You can see the Qs right here, and Qs, $101. So my question to you, if you are a stock trader right now, would you rather sit 40 minutes into a trade using almost $12,000 in your buying power with trading 100 shares, and would you rather generate a profit of $100, or would you rather trade NASDAQ and made the discovery that I made about 9 years ago and actually start trading futures? All right, let's take a look at some daily results. Like I said, we have a very highly algorithm method. Okay, so today in the trading room, I came in, I said, these are the trades for the day. So we had the game plan for the indices. We had a game plan for gold today. I sent the video out to all my students, and voila, the trade of the day. Notice that I called it long at 16.12. This is from my personal portfolio, from my personal account. And you can see here that I took 3 positions. I don't take a lot of trades, and I know that, sometimes, I can, okay? But the fact is that I'm educating while I'm trading, so I'm risking way less than half of my risk size for these trades because I'm constantly talking to traders. I'm, trailing for them. They're asking questions, and I don't want to have a lot of pressure on me, so that's why I trade smaller size. Smaller size today brought me over $10,000 in profit. In fact, 11,400, and I am still in this trade. Right now, gold, I'm looking with the corner of my eye, is trading again at 1641. And I have exited 3/4 of my trade at 1650. I offered it out because it was it's getting really close to an extension, and I still have some further trades, as I still have some further targets into the 60, 75, etc. As a disclaimer, I want to share with you the fact that I have been in gold since 1580 and 1590, and we have called it long again, but that is the core trade. So we're going to keep that trade for the duration of the year. Okay, so that is with no management, but this is part of a quick swing in today. All right, so this is my result today. Very, very happy with the result. Okay, so here's a testimonial for today from Mark. He is a student of mine. He went through 4 courses with other companies, really big companies that did not provide the attention that he needed. So he was not profitable. He was, at that point that he couldn't really, step it up and try to go towards profitability. And he loves to trade big account. He has a relatively big account, so he likes to trade bigger size. So this is what he typed into the chat room today. And he said, Anka, I had 15 contracts of gold and had offered out 10 at 1650, keeping 5 for the remaining targets. Another phenomenal day. What is your trail now? So he was asking, so he exited the trade, and he was asking, okay, further directions, meaning where am I trailing the rest of the position. You are one of the most talented traders I know. Best trading room, hands down, Mark. So here's the math for Mark in case you don't know what 10 contracts mean. Mark sold 10 gold contracts at 1650 with an entry at 1620. So that means that he made, for his 10 contracts, he made 38 points. 38 points at $38. In fact, gold went up $38. So $38 in gold means $38,000 with 10 contracts, right? Because one contract would be $3,800. Think about this. What if you had only one contract? One contract. This would have been one of those days where you would have made $3,800, right? But we keep, and I'm going to share with you some other trades, and these are pure precision. Okay, like I said, it's a highly algorithmic trading. This is the E-mini S&P, and we have an email that is sent out to traders around 9 o'clock. It depends on price action. Sometimes a little bit earlier when the price is really stabilized, but now I'm waiting more and more, and as we're getting closer to the open, and then I send it out because I want to see the price action reaction. So here is what you expect when you are in my trading room, or when you are educated by us. You will know exactly what your entry point is, what your stop is, what your targets are, and for long or for short, right? So this is the trade today. This is the chart. This is what I project. There's always a screen share in the room, and traders have a visual of what we trade every single time. They see the entries, they see everything, they see the targets, they see absolutely everything, just the way you see the chart right now. So we were bullish above, and we were very lucky to have this pop that was generated by the Fed. And take a look at where the price is. The price went into the 3140 area. Notice our targets. We had targets. We had S&P long 3100, and we had targets at 3110. 3115, 3120, 3122, and 3125. So 3125 was one of the last targets before going into a massive extensions to 3145. So our traders are out at 3125. This is where the traders went out at 3125. But that's a massive, massive win. If you think about it, right, that's 25 points. Guys, 25 points in the E-mini S&P, where 1 point is $50. That is $1,200 per contract. We have traders in the room that trade micros, and that if you traded with one micro, that's $125. So guess what? If you have, I don't know, $1,000 account, and if you took this trade, you have $125. That's 10% of your account in one trade. Okay, so just to give you a bit of dimension. All right, this is the Dow, and we call trades every single day and all the indices. And of course, I mentioned my preferred trade and the chart that I love to trade. And a lot of traders like to trade at least two indices. I also like to trade around two indices, and not really all three, because I want to keep some money in case, you know, we need to hedge and we need to get some bonds or etc. So this is the E-mini Dow right here that you see, and this is the entry, 26,800. This is the breakout right here. It broke out on the massive, massive, massive move that it had, and you could see how it had achieved targets. Look at these targets. All of these targets achieved void to 27,000, and then after 27,000, 27,200, etc. So now 27,000, guess what? Our traders took profit. So that is a phenomenal profit, guys. That is 200 points. And this is price velocity. This is what I trade. This is what I train. And this is what I teach every single day. So $200 times 5, which is the tick size, is $1,000 move. This is $1,000 move. All right. Here's a comment from Josh. He entered S&P earlier at 30.62. So 30.62, so he made another almost 37 points before the trigger, plus he got this little bonus. So for him, it was a massive day today. This is NASDAQ right here, and you can see that NASDAQ punched through our breakout, bullish above, breakout zone, and we notice these charts notations. These are notations that you are going to be taught how to perform them so you could achieve the same results with clarity, and you don't need any special sophisticated indicator that is glittering all over your screen and is just distracting. So these are pure algo levels that the price is attracted to. Notice that when the price came in, notice how it expanded from the breakout area right into target. Notice how the rotations are happening here and back down. Notice the effect here, crashing back down, and the reversal that is coming right here. So NASDAQ long 89.15, and you can see that pretty much it achieved the target into the 89.80 area right here. All the targets achieved. 1, 2, 3, 4, 5, 6 targets, guys. 6 targets. Okay, so 89.80 was the exit, and 89.15 was the entry, and that is a massive $65. 65-point move. That is $1,300 with one contract. That's it, one contract. And if you traded with an E-mini, then it's 10th of that size. And here is Anna. She traded NASDAQ with micros. So she took the micro E-mini NASDAQ, and she made $280 in seconds. She was in and out in seconds. This is Russell. Russell also, here is the entry, bullish above 24. This is the entry. You can see it right here. And these are the targets, 15, 30, 35, and 40. Guess what? At 40, boom, you're done. And you're done for the day. You don't have to sit in front of the computer all day long. And this is also for the bearish side. We didn't even talk about the bearish side. You could see it bearish below right here. So traders that wanted to take the bearish below, you had one entry here, and the secondary entry came into after the doldrum period. And notice the targets for the bearish side into the 1480, 1475, and 1470 and 1465. It went to 1470. So it achieved 1, 2, 3 targets right here. So you could have played this to the upside, and if you want to stick around to trade some more in the afternoon, here you go. You have the bear side as well. So that's a double whammy. Also, we had another trade in oil that did not trigger and maintain into the same parameters. So it did not trigger. But honestly, you know, you don't need to be in all the trades, and all you need to do is execute one trade with precision. And this is the way I was educated. Get one trade and get it right. All right, here's what our members are saying about us. Top-notch education at the highest standard, more than I expected from an online course. The constant market analysis and live trading with laser sharp entries, stops, and trailing provided throughout the trading room changed my trading habits. Thank you, Anka. You are one of a kind. Also, above and beyond expectations. I have been with TradeOutLoud for 3 years. The trading room is at the highest level of professionalism, no fluff, just 100% focus on trading. The futures course is robust, comprehensive, and very detailed. I give a 5-star rating. If you want to succeed in trading, this is the place. It is a place for serious traders. Here's another order. Anka's incredibly thorough and giving teacher. Her market expertise is amazing, and her ability to explain reaches experienced and beginner traders alike. Her concern for the success of her students and her ability is always evident. Being her student and in the trading room is really a privilege, always encouraging. Her transparency is really trading out loud. All right, so again, you know, I could go on and on and on and on here. An artist at futures trading, excellence, pure and extraordinary. That has been my experience with the TradeOutLoud trading room. It's been said that trading is more art than science. If that's the case, then Anka is the Picasso of futures trading. I love this. I love this comparison. Her method of reading the charts with price action, volume, and a few moving averages is phenomenal. She walks you through each trade, and if you get into a trade on your own, as I have, and many traders do actually in our trading room, that turns against you, she will quickly guide you on getting out the most profitable way, which she did. And that is another thing that we do. So every trader, you know, you find yourself that you're jumping in a trade too early or too late, and, you know, just ask for help. That's why we're there. You know, there are no secrets when it comes to trading. And again, there are no silly questions when it comes to your trading money. And I love to work the trades out. So to me, it's a challenge to try to work the trade out. We add more, we average out, we do a lot of works. So I often tell my traders in the trading room, just give me a trade and just blindfold me either on the buy or the sell button, and I guarantee you that I'm going to get out of the trade positive. I can work the trade out. And this is one of the things that any great trader needs to learn, is how to work the trade out. Don't be fearful about the market. Let me tell you a little secret. You are fearful when you are way over positioned. Position yourself less, like I do. Like you would have probably expected me to have like 20 contracts, or like Mark having 15 contracts. No, I had 3 contracts and I'm fine with it. Okay. Skip, if you go to our website, go under the trading room tab right from our website, and you find all the details right there. Okay. And again, if you want to read more about, you know, all the testimonials there, we also have a review page on our website. You could read more about there. I don't want to lose any of your time with this. Waste any of your time with this. So here's another trade also executed with entry 1 and entry 2 in the trading room. This was a swing trade that was called, and this is first entry right here, second entry right here. You can see that I only have 2 contracts. So, but if you have 2 or 3 trades, trust me, you're going to generate a lot of money. Okay, you're going to be generating a lot of money. Also another trade in the Dow. This is with a little bit more size, 5 contracts. I usually trade about 3 to 5 contracts. I don't typically take on, you know, like huge positions, because if I need to do any damage control, then I can apply, you know, more contracts as I need. But the same principles that I use, you can see it right here, 5 contracts, over $1,000. Also the E-mini S&P entry 1 and 2, typically we have separate entries, or it depends on the market environment. Okay, it really depends on the market environment. All right, these are some reviews that we sent back for the trades that we took. Amazing trading today. You can see them. These are all for February. And by the way, you could go on our website and you could view the performance portfolio. I don't think I have it here. I have to check it out, but I don't think so. I actually shared it with you guys yesterday. And so this month, basically we only had this, you know, the trades from today. Yesterday, I was just sitting on my hands. I didn't take a lot of trades. All right, so these are the reports that we have. You can see it right here, very transparent. So we are accountable for everything. And plus, you know, we have timestamps. So all the emails go out around 9 o'clock in the morning. So these are timestamps. So anyone that would like to back test or anything, you know, they have access to all the trades that we communicate with our traders. Okay, so how much money you made this year? Okay, here you go. January, you know, and this is trading with 1 contract. Okay, this is trading with 1 contract, so no more, no less. This is one contract. And you can see right here, right at the bottom, you can see, I'm not going to put my cursor because I'm going to have that little pop-up from this Excel sheet. But you can see the swing in gold of January 31st. You can see it right there. You can see the 1590 entry position, and I wrote core, so I have another position on there. And you can see the targets. I have targets layered out all the way to 1700, and I also have targets beyond 1700. So that's wild. I had 36 trades in January. 8 of them were losing trades. I'm sorry, I had 44 trades in January, out of which 8 were losing trades and 36 were winning trades. And I have a win percentage of 81.82 for January. For February, I have a winning percentage. No, it's not true. Okay, this is an older slide. The winning percentage, we had 3 more winning trades and 1 losing trade in February. Okay, so it's around 86% or something like that. We typically do not release all the data from our trades unless it's the end of the quarter, because we are still into some swings, like we are into gold. So we don't have the final result. What if gold is going to stop out? I mean, that's going to affect the result, and you're going to see a huge positive result right there. If we publish it now, and then at the end of March, what if gold is going to dive and it's going to go to 1400? And then for us, it's going to be a loss, obviously. So as soon as we are exiting all the trades, this is when we're populating that transparent portfolio that we have on our website. It's under the trading room tab, and you can see all the results since we initiated the trading room in 2017. Daily bias. So when you look at a chart, what do you need to have? Well, first off, when you look at a chart, you need to evaluate on the time frame that you're watching, and especially on a little bit higher time frame. I like to do my analysis on the daily chart, hourly chart, and 4-hour chart, and I want to see if we have some kind of correlation of higher highs, higher lows, and especially when I'm bullish. Today, because of the 5-minute chart structure that you saw when I shared with you the trades, we had a succession of higher highs and higher lows, and it was very obvious that the trade was trying to push a little bit higher, and that's why we were more bullish than bearish right off the trading session today. And we said, you know what, if the environment is going to deteriorate in the afternoon trading session, then we could actually look at the bearish side. But at the moment, at that open, we were looking higher with higher highs and higher lows, and was trending higher. So we define our breakout zone, and we traded as such, and you saw the results. Also bearish, we have lower lows and lower highs, and for instance, right now we don't have anything that is suggesting still bearish environment, because when I'm looking at the structure, even on the 1-hour chart, even though we had some we call the trades short, as you saw on the charts, and they have achieved the short targets. The structure does not support at the moment any kind of short positions. This is still a fine line of definition of support. If we trade a little bit below that, and let's see how this Super Tuesday is going to turn out, because this is going to be a very big influencer on the indices. And also neutral, when you're having a sideways range, just remember one thing. Are we in an uptrend on the time frame where you're observing the range, or are we in a downtrend when we are observing a range? If we're in an uptrend and you see a range, obviously you're going to be buying the breakout, and of course have a little game plan in case it wants to break down. And but at the same time, look at the structure and also pay attention to some economic releases that are coming out. And also in a downtrend, obviously you want to short, you don't want to be long. But if conditions change, remember, if you have massive support on a higher time frame, you could actually look for a long. So that would be your plan. Okay. The next thing is that you need to define your strategy depending on the trend, right? So you're either going to buy every single pullback or sell every single rally. Or like I said, if you're in a sideways market, if you're in an uptrend, you're going to look to buy. And if you're in a downtrend, you're going to look to short. Focus on the strategy and the chart, and not on the P&L. This is so important, because if you find yourself that you're sweating in front of the computer, and trust me, I have had issues with accidentally putting on more size, because it happens, and especially in more in stocks than in futures indices, because when you're trading with stocks, you're putting either 1,000 shares or 2,500 shares or whatever the case may be, or even 250 shares. And oftentimes when you punch in 2500, sometimes it has happened to me that I have punched in 2500, right? So instead of 250 shares, I got 2,500 shares, and then you have the tendency not to watch the chart because you're so pressured by not losing money that you're watching the P&L. And what I do in that specific instance is that try to unload and try to get into that specific range where I wanted to take the trade. Obviously, you have to have a damage control in place. If you're overly loaded with more contracts or more size, have a hard stop. As soon as it breaks out of your pattern and it's starting to move higher, let's say, and if you were long directionally biased, make sure that you place your stop as close as possible to break even on the contracts that you mistakenly added, right? So you have the pressure off of that. So focus on the strategy and on the chart and not on the P&L. Also, the other thing is no egos. And obviously, there's no crying in trading. When I first quit my job, and this was like many, many years ago, and I decided to day trade and swing trade and obviously trade and invest my own accounts in the market, I went through a rough time as well. First off, it was the fear of not having a monthly income. I mean, I was used to getting, getting 2 paychecks a month, and then all of a sudden, guess what? It stopped. So from, basically 16, 17, actually 17 years ago, I'm like, oh my God, like this is serious. Like I'm really trading my own accounts. And the reality is that, I have been, trading, and I've been, doing my stuff for about 3 to 6 months, and everything was going really great. And probably because I was getting very comfortable. And don't forget that I really come from investing background. So I do have a solid education, and I was mentored in the market. I have, I have market education. So, I have a master's in stock market and in financial markets and financial transactions. So that helps. So it's not that I'm coming from a different background and, everything was new to me. So no, I was feeling very comfortable in the market, but like everyone in here wants to find that holy grail. And trust me, I was looking for it as well. So I'm guilty. So what happened was that, I dived into, it was not a trading room, but I was in many trading rooms, by the way, because it felt so lonely, trading on my own. And I actually helped in trading rooms. So it was really good. So I was like, I wasn't paid to do it, but I would love to share my trades and what I was doing. And I got a lot of following there. So there were actually individuals in the trading room that were following my trades. And, the reality is that there was this newsroom. So I paid a lot of money. I think at the time it was between $600 or $800 to be in that. So you would actually get the news before it hits the wires. I would try to get, and this was in stock trading. So you would try to get in on that news velocity kind of move. And sometimes you made money, but most of the time I lost a lot of money in it. So I ditched that room. So again, I spent a lot of money being in that room for about 3 to 4 months. And then I was like, okay. So that was the time when I would wake up every morning and I would cry every morning. And I didn't realize, it's like, oh my God, I don't want to lose again, because I was almost losing every single day being in that room. So yesterday I had a presentation where I mentioned that if you have a system that is working for you, do not change it. Do not listen to me today. Do not listen to anyone today. Just mind your own business. But if you have a system that is not working for you and you're in the red all the time, and you're constantly saying to yourself, I am right, I'm gonna get this right, don't let your ego dictate your next market move. Okay. And the other thing is like no crying and trading. Literally, like I said, I was literally crying when I would get up. It's like, I don't want to have another red day today, and finally it hit me. It's like, why am I crying? Like all I have to do is eliminate that room that I was in. So if you are emotional, if you have sweaty palms, and if you're trading way over your risk level, it means that you're nervous, right? You are nervous. You're trading over your emotional capacity. Have a well thought process and a strategy that you will implement every single day. You have to have a routine. Okay. I have a routine every single day. So I get up, I go outside. So I go for a power walk for about 30 to 45 minutes. And then I come back in, I grab a smoothie, and I'm diving into the markets. It clears my head. And during the lunch break, like today, I went for a swim, and I go for about an hour. I go for a swim, I come back. So I have a routine. And also the routine that you have for yourself will dictate how you perform that day. And also, obviously, you have to have a routine for the market. So you get up, first off, when you turn on your trading computer, what do you look at first? I like to look at economic releases first before I even pop up my platform. Walk and smoothie. Yeah, I've discovered like this when I went this weekend to Costco. Everybody was buying toilet paper and sanitizer. I was buying the frozen fruit. Okay. So the thing is that have a routine. What are you going to look for first? I look at economic releases. I don't have CNBC on when I'm trading. I then I look at my platform to see if it's updating and to see if the price is keeping up. The reality is that you need to develop this routine before you even start trading. So market routine, risk, risk. This is very important. The success of the trade can only be considered only if you take into consideration the risk. So before taking the trade, you as a trader need to evaluate the risk and the risk potential. So what is the risk? The risk is the difference between your entry and your stop, right? And this is the only variable, because sometimes you could have a stop in the mini S&P of 5 points or of 2 points, sometimes of 10 points, sometimes of 50 points, sometimes of 100 points in volatile markets, right? So you do not dictate the risk, but the market is telling you, depending on the time frame that you're trading, what risk you need to apply. And of course, you need to risk the same amount every single time. So, and then position size for that risk. This is very important. If risk is asymmetric, the trade should be skipped, and the trader should wait for a better setup that would provide a better reward. So that means that if you, let's say, see a perfect entry with a perfect risk, but you have a target that is really close by, you don't take that trade. So I don't take that trade. I need to have like a wide tradable void in order to take that trade. Position sizing. Position sizing will determine how many contracts you are going to take the trade with. So according to your account size and your daily loss limit. Position sizing should be determined by your account size and your risk tolerance, personal risk tolerance. So what do I mean by that? Well, first off, depending on your account size, I never risk more than 1% per trade. And I advise newer traders to risk even less than that, 0.5%, because you're in the learning process. When you are in a learning process, I highly recommend you don't dive into a full contract, but trade in micros. And believe me, size is not really that important. Trade with one micro, because you need to develop the skills to identify entries, to identify stops, to identify targets, and then you add on position sizing and all the fun stuff. Because if you literally learn everything and you jump in first with position sizing, with determining entries, determining stops, all that stuff, it's really not, you're not going to do it well. So you have to do it gradually in steps. So like I said, position sizing is determined by account size. So like I said, 1%, some traders go as far as 2.5%. I don't. I only trade 1%. I'm a very conservative trader, and I'm a very, very picky trader. Sometimes we don't take trades in a day or 2 or 3, and sometimes we take 3 trades in a day. Patience equals money. Okay. Also, patience equals money, because listen, if you have to have the patience to wait for the chart to set up, depending on your time frame. My preferred time frames are from 5 minutes to 15 minutes, and when I'm day trading. But I'm also, and these are my executional time frames. Sometimes in quiet market environments when we don't have volatility, and we didn't have a lot of volatility in 2019. Like we didn't. We subsided from that 2018 volatility, and we transitioned into something that was really nicely tradable into 2018, and even in January and February of 2020. We had a phenomenal market in January, where you would wake up and you would look at a chart and you would wait for a pullback and just buy. So have the patience to wait. And also, if you have the patience to wait, and this is an exercise that I teach my traders, watch a 15-minute chart. If you want to be a profitable trader, ditch the smaller time frames, the tick charts, the 1-minute charts, the 5-minute charts. A lot of traders are spinning their wheels in these very small time frames. Things are very divergent, and especially into these markets. And remember that the higher time frames are always dictating what the smaller time frames are doing. If you are, I would go as as close as a 5-minute, and especially in this market environment, more into the 15-minute, because you have more clarity. And remember, sometimes you may see on the tick chart or the 1-minute or the 5-minute chart, you can potentially see a buy setup or a rotation that may be happening off a support zone. But on the 1-hour chart and the 30-minute chart would signal a sell. So what do you think is going to happen? The 1-hour chart is always going to win, and it's going to trigger you in on the 1 and the 2-minute or on the tick chart, and then it's going to crash you, because they're going to push the price lower. Because remember, institutions are programmed, most of the institutional traders are trading off the higher time frames, and the algos are trading off smaller time frames, but they're coordinating their trades with higher time frames. And that's why traders that are trading tick charts and 1-minute charts are losing more than they're making. The other thing is that you need to, for every single unit that you risk, you need to look for a profit of at least 2 to 3 times. If you don't do that, that's a recipe for disaster. You will blow your account, guaranteed. We have a course that we are enrolling right now for. The course is at the end of this month. It's actually the last week of March. It is the Power Income Futures Trading course. I teach the course, and it is a 5-day live course. It's a super comprehensive course. It is an institutional grade trading system. It is literally a trade that it is a course that will teach you how to trade stress-free. It teaches you the institutional levels, precise buy and sell zones, how you saw my charts with bullish above, bearish below, target 1, target 2, target 3, stops, etc. We teach you management and risk management, because what is a trade without management, right? We had, and I had a lot of traders that came to me and said, hey, I know how to identify a trade, but I don't really know how to manage it. Okay, so we have simple, very, very simple management techniques that are like unbelievably simple. Hayat's patterns and setups. We teach you the Hayat's patterns and setups, and actually we teach you 10 trading strategies, even though throughout the trading in trading years you're going to be using basically 2 or 3, but you need to have the whole arsenal. How and where to place stops, which is very important, and what types of stops, because sometimes you have to use soft stops, which are literally mental stops, and where to put the hard stop, that emergency stop. We also teach you trading psychology, and one of the most important things that we teach is how to put the puzzle together. Trading is not about learning where the entry is, or learning just management, or learning just psychology, or learning just trends, or learning just technical analysis. No, it's about combining everything, and that's one of the reasons traders fail, is because they don't know how to put all the puzzle together in a fraction of the time, because sometimes you don't have a lot of time on hand and you need to put all the puzzle together. What time frame to look at to get the bias? What time frame should I initiate the trades on? What time frame is more suitable for volatile markets? Can I identify volatility? Can volatility actually be predetermined? Because there are things that can be predetermined. We teach you the most powerful day trading chart patterns and how to exploit them for literally above average gains. We also teach you the 6 major disciplines of every trade, like the entry, calculated entries, calculated stops, calculating targets, how you manage those once you enter the trade, long or short. Position sizing, how do you position size exactly according to your account size. Trailing, we teach you how to journal. Also market tempo. The market is always into a tempo, right? There's a buy phase, there's a pullback phase, or a sell phase. We teach you the specific market tempo. We teach you the trigger times. We teach you rotation times when the market is the market cycle, right? How to maximize your timing using key moving averages and other powerful indicators that are free for you to use. How to maximize your gains and minimize your losses using proper money management techniques. Also, market timing, precise timing, like when to buy and where to sell, so you don't waste your time and you don't waste your money. Because if I, let's say, miss the open, I know that the next trigger time in the market is going to be between 10:15 and 10:30. So I could go grab a cup of coffee and then I could watch price action until 10:30. So I know that as I'm getting closer to my execution time, I need to see a certain pattern, and the pattern needs to meet the timing, and then I need to go to get into the trade. So we teach you precise locations where to buy and sell depending on the time of the day, and also advanced technical analysis. This is a 2-day actually event that we have. It's like technical analysis days are the biggest. The 2 days dedicated to technical analysis and so much more. So what's included with the course? We have the on-demand recording, we have the e-manual, we have member-only lectures, we have group mentoring sessions throughout the year. I offer you my platform layout, so you'll have a professional platform layout, so you don't have to toggle along charts. You get unlimited free retakes, because we do believe that it's really hard to absorb all 5 days it's really impossible to absorb all the manual in 5 days. So you come for retakes every single month. You get support throughout the learning process. You have a question, you have my number, you get to call me, you get risk charts and more with that. So the Power Income Futures trading course begins March 30th. It's a 5-day event. It wraps up on April 3rd. We also offer 30 days live in our trading room, and you have me as your mentor for the 30 days. And obviously you can continue in our trading room. In fact, 99% of the traders have been trading with us. The course tuition is $49.95. We also offer installments, and we have just waived the $500 fee for installments. So if you want to sign up through installments, you're basically paying the same price as for the whole amount. If you want to sign up, shoot us an email at info@TradeOutLoud.com. And to find out more information about the course, you can log in at TradeOutLoud.com/futures. Thanks so much, David. Thank you for posting the link.
Yeah, no problem. Thanks.